Hello and welcome, and I'm Konstantin Kogan, and we're at Holistic Investments. I'm really excited to have an amazing guest today, who's Lee Bratcher, who's the president and founder of Texas Blockchain Council. Hi, Lee.
Hey, Konstantin. Thanks for having me on.
Thank you for being with us. And traditionally, we're doing it in the middle so that they don't think we don't respect the legal and compliance side. So this content is of informational purposes only. You should not construe any such information or other material as legal, tax, investment, financial, or any other advice. Now we're off the hook. We can talk about literally anything we want, and no investment advices. Lee, you have an amazing career. I'm coming from the captain of the army and then to basically go through a PhD in political science and now becoming literally like one of the loudest and the most important voices in Texas, and I would say nationwide. And basically helping crafting like one of the most important, in my opinion, bill, which is, we're going to talk about it, HB 1666, first of its kind proof of reserves bill, in the United States. Tell us a little bit about yourself, about your story. How did you get here?
Yeah, it's a great question, Konstantin. Thanks for having me on. It's an honor. I'll say that it did start when I was an academic. I was working as a political science professor in the Dallas area and studying property rights as my area of research. I happened to be up in the Army War College doing some research up there. I was an Army Reserve officer at the time, and researching property rights and how property rights can make, when people are secure in their property rights, it makes them less likely to join conflicts, or and it also makes them more likely to reinvest any residual income in their assets, whether that's real estate or otherwise, or their small businesses. So just generally creates human flourishing. And there's lots of evidence for that. Hernando de Soto, who wrote Mystery of Capital, is probably the most famous person that writes on this topic. Maybe not famous outside of academia, but anyways, that's what I was studying, and I came across the Bitcoin white paper, and I started to understand that digital property rights could be protected through blockchain, and whether that was Bitcoin or other instances of it, and that even real-world property rights and real-world assets could be made more secure through transparency that was brought about by blockchain technology. So, yeah, that's what led me to start the Texas Blockchain Council. Also, I saw sort of a lack of effective communication. There were very few liaisons between the traditional regulators and elected officials and the industry. That was a little rough around the edges at that time. We've come a long way since then. But that's really the market gap that I saw for an industry association that could help on the policy side, but also on the business development side too.
Now, since you've mentioned the property rights, before we jump into the proof of reserves, Bitcoin mining, which is a huge topic, I'm curious to basically ask you about the property rights itself and tokenization. We already seen several ATSs established in the United States. There's platforms that they help you to create a security token offering. Now, the market is very small, right? And I'm curious to pick your brain and as an expert, so to speak, in this particular topic, where do you see it going in the future?
Well, the short answer is I don't know. I think there's a couple different ways that I would guess that it would go. One is some of the problem that we need to solve is liquidity, right? So the biggest obstacle for achieving markets at scale that for tokenized real estate will probably be the first one, but there'll be other real world assets as well, is liquidity. And if you have all these different assets on different platforms, you really won't have economies of scale. You won't have eyeballs, the right number of eyeballs, but the right amount of liquidity, the right number of counterparties. And so we either need some significant market makers or just other liquidity providers. So it could be that the ATSs begin to merge, and there's some mergers and acquisitions that start to drive some of that. Or it could be that there's interoperability between them, and you can see different assets on multiple sites. There's some regulatory and compliance issues and hurdles that have to be gone through there. And then there's also the chance that one of the big national exchanges There's 13 in the US, the two most famous being the New York Stock Exchange and the NASDAQ, obviously. But there's 11 others. One of them could take this head on and become a market leader. And therefore, you have a significant amount of liquidity when you have an exchange of that size that gets involved. So I don't know where it's going to go, but it will need to take one of those tracks, or maybe even a track that we're not thinking of yet, in order to get more liquidity for us to realize the true possibilities that we're talking about here.
Yeah, I would agree with you. Liquidity is definitely the biggest issue, because otherwise it's sometimes not even profitable to tokenize anything, like especially to underwrite huge businesses, whether it's real estate or any other like large businesses. Now, obviously, we're jumping to the core topic, like the bill that you historically passed, like, the first, I would say it's a historical moment, seriously, for the entire industry, for United States. Not many people know about it, so it's my honor to, basically pick your brain and go into the pros and cons of the bill, right? Because obviously, as anything in the world, there's a beginning, and it gives us reassurance. But I want to go into deep conversation about it. So HB 1666, again, proof of reserves, and we've seen that you worked a lot with a lot of constituents, a lot of participants, and we've seen previously, by the way, there were analogies and people who were trying to push for it, like in Wyoming and Bermuda and other countries of the world. But correct me if I'm wrong. I think in terms of regulatory body who like publicly actually accepted it, Texas is the first, right?
Well, from our perspective and from the research that we've done, that is correct. There are certainly other jurisdictions that perhaps utilize it, but it is not in statute. And so it is in statute now. In Texas, it went into effect a few weeks ago. And I'll say that it's not a perfect law. There are no perfect laws, but this one in particular is merely a tool for the regulators, transparency tool, an encouragement for digital asset service providers to be more transparent around proof of reserves and liabilities. And we'll eventually get to a real-time proof of reserve auditability. Whether the regulator will have that, of course, I think the answer is yes, but then the consumer may also have that into their own assets. That's much more difficult. And exchanges have limited bandwidth and limited developer hours that they can throw at all these challenges. So they're working hard to become more transparent. So it's I would say this is just a step in the process. It's certainly we've not arrived. We're on a journey.
Yeah. So let's go into it, right? So we read the bill. Obviously, we're not going to go just reading about it, but the first point, which is important, who the law applies to. So it says the digital asset providers, as defined by the bill, serving more than 500 customers in the state and holding at least 10 million of customer funds, would be restricted from commingling the customer funds with any other type of operational capital and using customer funds for any other transaction besides the transaction demanded by the customer. Now, it's incredibly important because we've seen FTX, Quadriga, and many other examples of exchanges. If this bill would be in place, it would not 100% bulletproof the retail investors, but at least can indicate the problem before we seeing the bankruptcy. So can you elaborate, what are the major pros of this? How can it help to protect investors, and what are the cons?
Sure. Yeah, we worked alongside various digital asset service providers and exchanges, basically, to ensure that there were the necessary carve-outs for their normal business operations, like omnibus accounts, or, for example, if we make a trade and Coinbase or blockchain.com or whatever exchange it is provides some of their funds, house funds, to help facilitate that transaction, that is not a breach of the bill. It's more so regulating against the commingling of customer funds with funds that the exchange is then house funds that they're then investing or trying to achieve some sort of some revenue or yield on. So that's really what it's going after. Mm-hmm. And so, yeah, there are some carve-outs for omnibus accounts and things like that. But in reality, what we saw with FTX and other exchanges that were doing this is that the customer funds would not have been at any point. So there was not enough reserves to match the liabilities. And if the bank run, if you will, or the run on that exchange could have happened months earlier, and it would have been a similar fiasco. So it's not like there was just a point in time where it really caught them in a bad spot. Of course, it really shouldn't matter, right? It should be that if a consumer entrusts assets to another custodian, like an exchange, that that exchange is holding those assets and then would provide those assets back to the consumer whenever the consumer needs them. Mm-hmm. Now, I know that I'm using the term custodian incorrectly in the legal sense here, because these exchanges were not true custodians in the same sense that banks are custodians of our assets. But I think there was an understanding from the consumer that that was sort of the relationship. And so as we work towards navigating that, the murkiness of the differences there, I think more transparency from the exchanges will be helpful. And so it is a quarterly audit, a quarterly attestation. There's a difference there between audit and attestation. So the quarterly attestation required, and it's a self-attested proof of reserves and liabilities. And then there's an annual third-party attested proof of reserves and liabilities. So again, that's not perfect. I think your listeners will very quickly think, well, what if someone does some sort of flash loan or short-term loan from another part of the business or another entity that makes their balance sheet look a certain way during that snapshot? That is exactly why this bill needs to be prepared with or partnered with traditional, assurance and audit practices. So it's not a silver bullet. And I think it's possible for, if there was real-time proof of reserves, for this to be a significant assurance practice, maybe become the main assurance practice. But that's sort of an aspiration on a journey. We're on a journey there, and it could take several years.
So let's try to compress the several years into like one little journey that there is something that in our hands to change. So let's imagine you have all the resources to make immediate changes. What would be the step-by-step changes that you think we should try to implement so that it will be more efficient? Let's say you mentioned daily attestation or maybe on-chain implementation, maybe pushing banks to be approved as custodians of digital assets. So maybe you can help us to understand more.
Yeah, really, the end goal would be real-time proof of reserves on-chain and real-time, such that a customer or regulator could go in. And now this doesn't need to be accessible by everyone, right? But the general public can see wallet addresses, some of these omnibus addresses for some of these exchanges, and they can surmise or guess about some activity, I guess. But to be able to see on the back end, the regulators and the consumer itself, the consumer obviously has a limited view into his or her own assets only. And then the regulator would have sort of a bird's eye view, probably amalgamated, right? You wouldn't want them to have all the granular data, but they would have sort of the net assets and liabilities data. And so I think that's a long ways off, mostly because it's very difficult to do. And there's not a lot of firms out there that would be willing to partner with the exchanges in those efforts. And it takes a lot of time. I don't know from personal experience, because I've never worked at an exchange, but I hear from a lot of our members who are exchanges and other exchanges that it is very time consuming to go from a snapshot proof of reserves to real-time proof of reserves. So cost expensive as far as man hours, resources, time. And I think that's really the main obstacles.
And just so that everyone will be clear, so who do you think would be an ideal auditor to perform this? Because it's actually, you need to have a pretty good technical like background to do that, right? And we know that Big Four are working on it already. Like there's like KPMG, EY, like Deloitte, they have all digital asset departments. But the smaller firms, I don't think they have enough acumen right at this particular moment. So we have enough to even cater the entire market. So what do you think should happen here in terms of CPAs and auditors?
That's a great question. That is another obstacle as well, is, getting them ready to do this. And I do think in the near term, we'll probably have to expand the field of available companies that can do this, and expand it to sort of digital forensics companies that have a lot of expertise in this kind of thing, like Chainalysis and CipherTrace and companies like that. So, while those are not audit firms, they are very capable, and probably more capable than the vast majority of firms out there. And, I know the network firm and there's other firms that have just really excelled at proof of reserves. But I agree with you that if we were to mandate a real-time proof of reserves tomorrow, there really wouldn't be enough firms to conduct that audit. And that's why it's an attestation at this moment, and just an annual requirement for the third-party attestation. So yeah, it's, I think, a work in progress, and it'll take some time.
Well, the good news, that means if their demand will be higher than supply, that means whoever is listening, it's a great business opportunity. If you're
Absolutely.
a CPA or an auditor and you have run a small firm, and it takes you, I don't know, take a course, 3 months course, like, on auditing, like, doing on-chain analysis, you'll make a fortune because not going to be a lot of competition, right? So,
Yeah, I do think that there will be some people that get snapped up too, right? A lot of the big firms will hire, they'll get their recruiters on this, and they'll go into some of these digital assets forensics companies and snap up some of these talented people and
yeah.
have them.
Or do just do an M&A. They're just buy them just because it's easier than to build their own book.
Yeah.
So, okay, so this is interesting. So maybe we can give some practical aspects. I mean, I'm sure you already went through with some companies, all right? So I don't know if it's confidential or not, but I'm still going to ask you, right? What is the price of like doing this annual, auditing or attestation on like by a third party? Roughly, you can tell us like ballpark.
Yeah, we don't really know exactly. I've heard different estimates thrown out there. The way the bill is written is certainly not to be overly onerous and or overly cumbersome for the exchanges. So I've heard some estimates thrown out there as low as $10,000 to $20,000 a year. It's probably more likely that it would be in the $100,000 a year range for some of these engagements. And I think that cost could go up depending on the size of the exchange, how detailed and granular they're going to get. Are they just going to meet the letter of the law, or are they actually going to do something above and beyond? And that's certainly up to them. That's a business decision for them to make. But a pretty negligible cost when you compare it to the cost that we see from the lack of trust in the industry after FTX, which is certainly not the fault of the other great exchanges, just the fault of the criminals that ran that one. So, I don't envy the position that they're in, having to regain that trust, even though they weren't the ones that lost it.
Absolutely. And I can attest that this is actually a very small price. And this is important for the listeners to understand. Just by comparison, right? Smart contract audit, a traditional smart contract audit is probably going to be the same price or more expensive. So it's very similar. And to build like, this trust and like get a stamp of approval from a third party to show that you care, that you actually want to showcase that you have those reserves, is obviously invaluable for the brand awareness and brand recognition.
And I could see this costing much more in the future as the speed and frequency and the nuance increases. I mean, this could be $1 million a year, a seven-figure cost. Now, this law is not pushing there, but like this concept could eventually grow to be that. But I wouldn't look at it as a cost center. I would look at it more as reputation and brand building, like you said. And so that's for some of the large exchanges, might be too expensive in the short run, but in the long term, as they become institutions, large financial institutions like some of our large banks, that will be a very small cost relative to like what JP Morgan pays in compliance every year.
Oh, that's for sure. So maybe a few others. So we mentioned that it's going to be relevant for crypto exchanges, crypto custodians, crypto lenders. What other participants of the market do you think it will touch?
Really not that many beyond the ones that you've mentioned, because it is limited by the numbers that you said, the 500 users and $10 million in assets. And they also have to have a money transmission license. So that's the carrot and the stick here. The stick being the money transmission license that these users get from the Texas Department of Banking. So, there's really not that many that are that is required of. But it is an MTL is required of all exchanges. So, it'll be all the brand name exchanges that have MTLs in Texas that we all know and see commercials about.
100%. And there is also a term virtual asset service provider, right? Which is, is used in the US and in the other jurisdictions. So can you elaborate a little bit, like, how it will impact other states and and companies that try to operate nationwide?
Yeah. So really, this is, if there's a company that doesn't do business in Texas, this bill would not apply to them at all, because it just relates to the Texas money transmission license. So the virtual asset service provider, if they have a Texas MTL and they meet the other criteria, then they are bound by the bill or by the statute. I would say that our thought is, if you're going to do it for Texas and you build out that infrastructure, it's probably not too far of a reach to do it for other consumers across the country, even if those states don't adopt similar legislation, because Texas is a sufficiently large market, that it makes up probably more than 10% of all digital asset customers in the US. And so I don't know what we'll see here. A lot, the law's only been in place for about 4 weeks. So, I don't know if we'll see other states do this or not, but even if we don't, nobody's going to leave the Texas market. It's just too big of a market. Yes. Or, people could leave the Delaware market or the Rhode Island market, but you can't leave Texas, Florida, California, or New York.
100%. I mean, Texas is probably still number one or top three industrial economies, in the United States. And if you put it as a separate country, you're probably going to have a bigger GDP than a lot of other countries. So
it's the 9th largest in the world, actually. So the Texas GDP, if it was its own country, is larger than Canada and Brazil and some of these other large countries. So
yeah. And we have to remember that over 8.5 million Texans have invested already in cryptocurrencies and digital assets. So it's not like it was artificially created; it was actually catered from the demand, right? So I think this bill is an amazing, as a first step. Obviously, there are more steps, and we talked a little bit about it with you, right? So if I may unveil a little bit about the secret information you provided, right? That there is actually a conversation about potentially custody Bitcoin in Texas Bullion Depository. Is this a speculative assumption, or we can talk about it openly?
Yeah, we can certainly talk about it, because what we're doing and what we're thinking, well, we haven't done it yet. So this is something off into the future, but it's not confidential, because we're sort of doing it as just Texans without. We have worked with the government on this, and they are aware of this concept. But what we're establishing is a trust that doesn't really need the reciprocation of the state. So the trust could custody Bitcoin or other assets in in the name of the state of Texas, or the state of Texas would be the benefactor of the trust. And then those assets would remain in trust until which point the state of Texas is willing to accept those assets. So, it could be years before the state actually wants to custody its own Bitcoin, but we are considering starting a trust that would then hold those assets until that time.
So historically, this trust, it was holding gold, silver, palladium, platinum, right? So what do you think, not just from the monetary perspective and legislation, right? And what do you think psychologically it would mean for the industry?
I think it would be huge. I think it would be perhaps not as big as a Bitcoin ETF, but something on that scale. If at one point in the future, the state of Texas custodies Bitcoin in a hardware wallet in the Bullion Depository there near Austin, Texas. Texas is one of the few states that has its own gold depository. Other states do. New York has several, and Texas used to pay New York to hold its gold, or for citizens of the state of Texas to hold physical gold in New York depositories. And now the one here in Leander is able to do that, so that Texans aren't having to pay another state to custody their gold. But it would be great if Bitcoin was also I think that is probably a few years out as well, but doesn't mean that we can't get started with the trust, so that there could be some excitement sooner than a few years from now.
Is it fair to assume that just once that will happen, more institutional investors will go into this with an understanding that not only Bitcoin is accepted on multiple levels and the infrastructure is created institution, but also it's almost equivalent to holding gold, right? I think we're slowly going in this direction where Bitcoin will be another wealth preservation, as a lot of maximalists are trying to portray it, which is we're not there yet because it's too volatile, right? But in your opinion, do you think when is this good inflection point is going to happen?
Well, I don't know. I don't think anybody does, but I do think that this is another step in many steps, just like the Bitcoin ETF is a similar step that normalizes the digital asset industry, and Bitcoin in particular. It's going to take a lot of time for sure, but institutions are already signaling their willingness to get involved with all the ETF applications from the largest fund managers in the world. So that's certainly bullish. If we have the ninth largest economy in the world that is custodying Bitcoin, we have two countries that have issued or declared that Bitcoin is legal tender. We're well on our way, but we have a long way to go too.
No, 100%. And another way is actually providing an amazing infrastructure for miners who are they are I would call them in the ecosystem of the entire Bitcoin world. It's they're bees, that are super important because so, and as Texas, you're creating those hives and the opportunity so that they will flourish. Now, you mentioned before in your interviews that there are major players such as energy brokers, utilities, qualified scheduling entities, public utility commissions, and ERCOT, you as a I would say in between, as a quasi lobbyist and a nonprofit organization, right? So can you help us to understand the hierarchy of these players to help miners do business successfully in Texas?
Sure. Yeah. So Texas is home to 54% of U.S. Bitcoin mining, and that's from some new data that came out from the Miner Mag. Foundry data has us at 25%, but that's actually under reporting because of not all the Texas miners are using the Foundry pool, and they took the data snapshot in the summer when a lot of the Texas miners were curtailed. But from SEC data and from the Miner Mag, it shows about 54% of Texas or of mining in the U.S. is in Texas. That's around 2,200 megawatts of Bitcoin mining, and it's here because of the ERCOT grid. And so the ERCOT grid is a nonprofit. The ERCOT is a nonprofit entity that oversees the grid. The grid is deregulated, so there is a marketplace that ERCOT helps to manage, and overseeing all of the the power industry writ large is the Public Utility Commission of Texas. So they oversee all public utilities, and so under that is ERCOT, and ERCOT is run by a CEO named Pablo Vegas. Prior to him, it was a gentleman named Brad Jones. And so ERCOT is the entity that manages, grid frequency, the amount of supply and demand of energy on the grid. The utilities manage the all the wires, all the transmission lines. Sometimes they're called poles and wires companies, or TDSPs, transmission distribution service providers. And so they help the miners get interconnected. And then the miners use a qualified scheduling entity to schedule out when they're going to be using power or when they might curtail their power based upon power prices and the demands of the grid. So it can be a very symbiotic relationship. Flexible loads can be. We're in the very early days of flexible loads. So right now, if you were to ask ERCOT executives, they'd probably say, well, we're neutral on flexible loads. We see their benefit. And they do see that this summer we had incredible curtailment events where Bitcoin miners would curtail their power usage, and it really was helpful for the grid in Texas. We didn't have any blackouts or rolling blackouts or outages, and Texas miners were consuming, around 3% of the all energy consumed in Texas in one moment, and then when the grid conditions got tight, that went away. So it's not, by any means going to save the grid by itself, but 3% is a significant number. So flexible loads like Bitcoin miners combined with batteries on the supply side, Bitcoin miners and green hydrogen on the demand side, it can add up, certainly. So again, I would say that ERCOT would like to see more Bitcoin miners be in what's called SCED, which is Security Constrained Economic Dispatch. That just means that ERCOT is able to track the telemetry and the exact moment at which the price at which that miner would want to be curtailed. So we have some work left to do, and from our perspective, this is an incredible opportunity for Texas, and I think grids around the world. And ERCOT recognizes that, which is why they've been willing to work with us, and they've worked with us, for the last several years, and will continue to work with us because this is a huge opportunity. They've never had a load of this size that can be curtailable at the rates and at the speed that Bitcoin miners can be curtailable. So that's a little bit of the snapshot. It's a great responsibility for miners. And they take it very seriously. They take the responsibility to be good grid citizens very seriously. And so we've certainly not arrived, but similar to proof of reserves, we're on a journey. And we're pretty far along this journey. We've been on it with ERCOT for several years now. And so, certainly more things to overcome, but we're pretty excited about what this can do for Texas and about what it can do for grids globally.
Yeah, I mean, I actually watched your interview with Brad Jones, and I was impressed how he praised the entire industry and the fact that people who operate the grid, they're the Bitcoin miners are location, as you mentioned, location agnostic, flexible loads, and have a flat load profile. Which, in simplified words, what you're saying is basically they can turn off the consumption at any point of time. And he explained there in this video that that's not possible for any other industry. And that's, I think, is pretty unique. I didn't thought about it from this perspective, actually, that actually Bitcoin miners are being slammed by over-consuming or not using green energy, which we're going to go in a few minutes into this. And it's the opposite. They actually have the most reasonable consumption from the grid rather than any others. Because if you're operating a huge industrial facility, right, whether you're operating coal mine or you're recycling anything, you cannot just stop it immediately, right? It takes time to even stop it. So that is impressive. Which brings us to another topic, right? There's a traditional criticism in terms of green mining. Right now, there is a famous ECG, initiatives throughout the world and especially in the United States, which made a huge headlines when notably Tesla even dumped Bitcoin because it was not fully ECG compliant, right? But in reality, I've looked at the numbers, it changed tremendously. Most of the energy right now in Texas is renewable. Am I correct? Maybe help us with the numbers.
Sure. Yeah. Texas has the largest amount of renewables of any other state, and we're sitting at about a third of renewables at any given day. So that's a combination of wind and solar for us mostly. A third of the Texas grid, depending on the day and depending on the consumption pattern, that can be upwards of 30,000 megawatts. So 30,000 megawatts of renewable energy is more than the vast majority of states consume at all. I think probably only 2 or 3 states consume more energy than just the Texas renewable capacity. And it used to be all wind. Now it's a mix of wind and solar. Very little hydro in Texas, just the way that our rivers are. And we have some battery storage, but it's pretty minimal as well because battery storage is nascent and expensive. But lots of wind and solar here. And Bitcoin miners will do the other 2 things that are important. One is they're location agnostic. And you mentioned that, Konstantin. They will go to the other side of grid congestion. So people are probably not familiar with grid congestion, but what that means is if you have a big generation source, so that's supply of electricity, and then a big demand like a city, you really need a lot of transmission lines to get that energy to the city. If you have more generation than you have transmission capacity, you have what's called transmission congestion. And so the Bitcoin miner will then go on the other side of that congestion, buy the generation, which is probably somewhere out in West Texas where the wind is blowing and the sun is shining, and they will consume power out there. And what they can do is say, for example, in Texas, we have 20 gigawatts of, and that's 20,000 megawatts of wind energy out in West Texas, but only about 8 gigawatts or 8,000 megawatts of transmission capacity to the major population centers of the state. So a lot of that, maybe a few gigawatts is being consumed in West Texas, but West Texas is not very populous, so they don't use a lot of energy. And then, and of course, the energy is then getting transmitted to Dallas, Houston, Austin, other population centers. But the energy that doesn't get used is curtailed, grounded out, wasted essentially. And so the Bitcoin miners can utilize wasted energy. And certainly I'm not saying that all Bitcoin mining is utilizing wasted energy. But what I am saying is Bitcoin miners are not going to be using energy that would otherwise prevent someone else from using energy. So what do I mean by that? There's 2 factors here: location and time of day. So if Bitcoin miners are consuming energy mostly on the opposite side of grid congestion, that's very good. They're using a lot of wasted energy. Even if they're not, even if they're located in Central Texas and they're using energy that is part of that could otherwise have gotten to Austin or Dallas, those electrons need to be used instantly, right? These things just cannot be stored unless you have a ton of battery, which is just not here yet. So we need a user of that electricity when we have an overabundance of it. But then when we have a constraint or a lack of electricity, we need a user that's willing to turn off. So that's called the duck curve. That's time of day. We use a lot of electricity in the morning, not so much midday, a ton in the afternoon, and then hardly any overnight. And the shape of that line graph looks a little bit like a duck. And so if we've got no flexible users, then the generation companies are, struggling to keep up in times of high demand, but then they're like, wasting electricity and losing money overnight when they don't have a lot of consumption. So that's called the duck curve. And the Bitcoin miners are here, and they're able to compress the curves, right? They're able to shave off some of those peaks. And since they're on overnight or in low demand times, they're able to boost up the valleys of the curve. And that, between the location agnosticism and the duck curve component, that is the true value of Bitcoin mining to really any grid.
Now, if we come back to a little bit, like to explain maybe the role of other players who are essential to this entire ecosystem, which are energy brokers, utilities, and qualified schedule entities. Can you briefly explain their role and how do they all interact between each other?
Yeah, so you've got retail electric providers, which are otherwise known as reps, that are sort of that conduit through which you're procuring power. You've got the qualified scheduling entity that's scheduling the power for the customer. And most of the miners in Texas are just paying spot prices for the power. So they're watching that price. And if price starts to go up above their Bitcoin mining break even, they'll turn off their machines. And that's a good thing, because price is a proxy for grid stress. When prices are low, the grid's not stressed at all. And we want the miners using as much of that electricity as possible. If prices are high, then we want the miners to turn off, because that electricity is needed by other, people on the grid. And it's just a dynamic system. So you don't have to have anybody calling around. You just get to watch the frequency of the grid and the price, the market price. And that helps you understand where we are with supply and demand. So in short, those players are facilitating the Bitcoin miners' participation in that delicate dance that I just described.
By the way, do you see anywhere a perspective of all these transactions? Because it's, essentially what you describe is almost like an exchange operations, right? Which eventually, like, it can be put on chain. Do you see, as a technology, is it possible the blockchain will be used to actually, like, somehow moderate the usage of the energy?
It's possible. I don't know in the near term if that will happen, but you're describing something that smart contracts can do pretty well. So, for example, smart contracts could be used to, secure collateral for power hedges or power purchase agreements. And if, maybe there's more collateral, and if some of that collateral needs to be liquidated, in the event of some price volatility for power, then the smart contract executes based upon some oracle, a price oracle, maybe ERCOT's probably the price oracle, because they are the true, clearing price of power.
Or you pay a premium to hedge, some of the price that you already, purchased for a particular, in a time frame.
Exactly. Yeah, and so about a third of the miners do purchase a hedge, and for those that don't know, that's just they're purchasing a forward block of power, saying, I will pay you this much for power for this long into the future. And that's just a way that, people hedge commodities all the time, and power is a commodity. So it's a good thing to be able to have those hedging products. It takes a lot of collateral to hedge, though. Something that I didn't know a couple of years ago, but I'm starting, to learn more about as I've done this, is the miners that do procure that forward hedge have posted a ton of collateral, because they could, the counterparty there is worried about the price of power, the real-time price. So if you get a hedge of power at 4 cents a kilowatt hour, and there's several weeks of power prices that it's low, like 2 or 3 cents, then the person that you've placed that hedge with is underwater on their, or they're losing money. And so that's why you have to have that collateral in that eventuality.
Yes.
But you're in the money if it's the other side. If you have the 4 cent hedge and real-time prices are much higher than that on average, then your hedge is kind of in the money.
Now, talking about the hedge and talking about different uncertainties in the world, right? So we in the United States are, I would say, in a way, ironically, victims of who's going to be elected, right? Which office, and which legislative body will be held, which judicial system, who are gonna, which stance are we as a major regulators, SEC, FINRA, CFTC, they're gonna have towards digital assets. We talked a little bit about the ETF, but I want to hear your overall opinion. I know we don't want to go too political, like Biden against Trump, but overall, in your opinion, what do you see as the positive outcome for the industry, for the blockchain industry specifically, of who should win? Not who will win, but who should win.
Well, I have an opinion that is probably shared by some, and maybe a frustrating opinion for others, that the gerontocracy that is the current political class should step aside for leaders from the next generation. And by that, I mean, I'm not talking about millennial leaders who are in their 30s. I'm talking about leaders, capable, qualified leaders in their 40s, 50s, and 60s. We just cannot afford to have leaders in their 70s and 80s who are well past their prime. And so the best thing, in my opinion, because we do see from polling, from the data, that digital assets are being adopted disproportionately. I mean, in Texas alone, you're 5 times more likely to own a digital asset if you're under the age of 29 than you are if you're over the age of 65. 5 times more likely. So we certainly, see that the youth, the exuberance, the willingness to innovate and take measured, necessary risks is at its optimum in that 40 to 60 range. And so we need elected officials that are, and not, it doesn't really, I'm not saying that we have to be in that age range, but they have to have that level of dynamism and that level of willingness to innovate. Because as you can see, I think any of your listeners can see, and as we read in books like Why Nations Fail, and other books that talk about the rise and fall of empires, we are on a decline in the United States. There's no doubt about it. We are at that stage where our convenience and comforts have caused us to lose that sense of urgency. Necessity is the mother of invention, and we have very little necessity in the US and in the West in general. I think Europe is a little bit further down that decline curve than we are. And if we do not change something about the way that we govern ourselves, the way that we present ourselves, the way that we innovate, the way that we, the work ethic that, is instilled in the next generation, we will quickly go the way of Western Europe. And that is, while we like their wines, we like their history, and we like to tour what they are doing, it's not a healthy trajectory for nations that used to rule the world. So I think that's a very similar story for the US dollar as the world reserve currency. We need to have elected officials that have longer time horizons. In the digital asset world, we talk about long time horizons a lot. If we don't have elected officials that have long time horizons, to them, the dollar losing its world reserve currency status in 6 or 7 years, maybe that's not a big deal if you're 75 years old.
Yeah.
But if you're 36 like me, that's a big deal.
Yeah. And yeah, for me, it's a big deal because, by the way, mentioning stable coins right now, I think you talked about it with Nick before in other podcasts you had, that stable coins can be a conduit to prolong the status of dollar as a reserve currency in the world, because it's measured now in billions. It's the 16th largest nation in terms of debt. And I think if you analyze objectively that probably 9% of the stable coins are denominated in US dollars, I think any reasonable economist, especially who are in the office, should take it quite seriously. And unfortunately, they're not. They're pausing all the stable coin bills, and not referring to it as something serious. Whereas this should be the opposite, right? So I'm 100% with you on this. But let me ask you a speculative question. If you were to bet, obviously, we're not predicting anything, but if you were to bet, who is going to win the elections, in 2024, what would be your bet?
I'll certainly give an answer to that, but I also have to give credit for Nick Carter for the data on the stablecoin stuff. So he was the one that did the research that showed that stablecoins, if they were a country, would be the 16th largest buyer of U.S. Treasuries. So great. And Nick always produces incredible work. So like to learn from him. And answering your question, my prediction, the polling numbers say that Trump is going to win. So I don't typically argue with data. And so
what do you think is going to mean to blockchain? If Trump wins, what would it mean for our industry?
I think a Trump win is better than a Biden win. Mm-hmm. But pretty much anybody else in the field is better than both of them. It's kind of a sad state that literally the worst outcome is Biden. The second worst outcome is Trump. And then all of the others RFK Jr. on the Democratic side is very friendly. Vivek Ramaswamy on the Republican side. I'm sure Tim Scott is great as well. He's very friendly to our industry. I'm sure Nikki Haley, she hasn't really stated a lot of positions, but would be great on this. So the sad state of affairs is that the two most likely people to win are the least likely people that we would want the least. I do think that Trump would be neutral towards the industry, which would be helpful because Biden has certainly been, and I don't think it's Biden himself. I think it's his the bureaucrats that he has in power. Bureaucrats may be a demeaning word. The civil servants that are working. Actually, it's not the civil servants. It's the appointed members of the White House, right? It's civil servants really don't take policy opinions on these kinds of things. It's the people that Biden has put into power within the different agencies that hold the politically appointed positions. They have been antagonistic, and that's just unfortunate. And I don't think it's because he's a Democrat. I just think that's because the people we just got, it was just unlucky that the people that he put in certain positions were antagonistic. I do tend to think that, people with stronger understanding of economics and business friendly, people with business experience are going to be better than career agitators or elected official or, just people that have been career organizers in politics. So that's about as delicately as I could say all that, but it's still probably a little controversial.
No, I appreciate it. Like, I think it's fair assessment, and it's always good to hear, especially for people who are not, let's say, from the United States, right? Because they don't understand it as deeply as yourself being born here. Like, I'm an immigrant, by the way. I'm from Europe, so like I only learn about this like for 9 years, so. I'm humble in this question. We also have to mention that a lot of the policies, a lot of the things which are created like in Texas are also due to incredible efforts of the team of the Texas Blockchain Council. And we have to mention that on November 15th to 17th, 2023, at Fort Worth Convention Center, there will be an event, an important summit. So you want to say a few words about it?
Sure. Yeah, we're hosting our third annual summit, North American Blockchain Summit. We plan to host elected officials, regulators, leaders in industry, thought leaders, executives from a lot of the largest digital asset companies in the space. So we'd love for your audience to come join us in November. We've also got a bunch of continuing education for bankers, lawyers, accountants, energy professionals, all down the line, because what we're trying to do is not just preach to the converted, to use an analogy. We need to bring in people from other industries that maybe their industry, 10% of their business is in the digital asset space, but and 90% is traditional, but they still want to learn about it. Maybe they're not an enthusiast, but they're exactly who we want to come to the conference. Of course, we want the enthusiasts too, because we need all the enthusiasts there to help orange pill all of the normies that come. But that's what we want. The mingling of experts and people that work in the space with professionals that want to learn more.
Yeah, well, you already have like dozens of members, and then let it be hundreds and thousands of members who's going to support you with all your endeavors. And before we end the show, there's a traditional question which I ask, and I never notify anyone, because in your case, it'll be interesting because your philosophy and political science was your major. So Lee, it's a personal question. What's the meaning of life to you?
There's a Westminster Catechism that says the meaning of life is to glorify God. And so I'm a Christian, and I do believe that. So that catechism, from hundreds of years ago, I still kind of rings in my mind as I think about that. So I think about glorifying God. I think about family, raising kids, and building businesses and building entities that will make other people's lives better. And yeah, we can only aspire to do all of those things. If I've done those three things, then I'm doing pretty good.
100%. Thank you for this sincere answer, and sincerely also wish you, you know, all the success and the upcoming convention, and overall with what you're doing in Texas Blockchain Council. It was an amazing show. Hopefully, I'll have you more on the show, and yeah, we'll hopefully see you in November.
Yeah, thanks, Constantine. Thanks for having me on.